Okay, I'm setting up a bullish trade here on Palantir. This is just a hypothetical trade just to show you the process. So my entry is going to be 1679. Entry 16.79. My stop is going to be 1659. That tells me I can do 500 shares with a $100 R. And then it gives me my targets down here. So let's go ahead and put this in the broker. We move this out of the way. And here in the broker, I have Palantir set up. I'm going to buy, and my quantity is going to be 500 per the spreadsheet. I am then going to do a stop limit. My stop, meaning what is going to be the trigger, is going to be 16.79. My limit is I'm going to give a couple pennies, 16.81, meaning I want to give it 2 pennies of wiggle room to make sure that this gets filled. We go to advanced, attach stop loss and profit taker. Stop loss, I said, was going to be 1659. And I'm going to go ahead and put in a profit taker of 3R just to have a number in there, which is going to be 17.39. Quickly review this. So I'm buying 500 shares Palantir. It's a stop limit. The trigger is going to be 1679. I don't want to pay any more than 1681. My profit taker is in place at 1739. Stop loss 1659. Click submit. So the order is there. And now I just have to wait and see if this actually triggers and we get into it. And again, all those numbers that I input into the order came from here. Now, tomorrow, when we go over placing orders and using TradingView, it's going to be much simpler. But the important thing is that you understand the mechanics, because the analogy that I'm going to talk about tomorrow is, if you have a child who's just learning to drive, you're not going to stick them in the Tesla and press the self-drive button, right? You're not just going to cut them loose in a car that is driving itself. You want them to understand how to drive, how the mechanics work. Because if something fails and they need to take over and they need to drive that vehicle, you want them to have the knowledge to be able to do that. So that's the reason why we are getting into kind of the nuts and bolts part here. And then tomorrow we are going to just make it a whole lot simpler for you in terms of looking at this on TradingView and using the tools that are available to you there. So just note down here, you can see that the order is live and I'm buying, and my stop again is 1679. You can't see that, but that is the quantity, which is 500. And then if you notice here, here's that bracket. It shows me that this is a bracket order, that all three of these pieces, components of the order, are all tied together. Okay, we're getting close here. Pushing up. So as you're watching the price action develop here, think about the sentiment of the candles and what's happening. So again, at one point, this would have been a larger bearish candle, but look at all the buying pressure. And you've seen that happen in real time where it was bearish and now clearly buyers are stepping in and pushing price higher. At least they're trying. Okay, we got close to getting filled. There we go. The order just filled. You can see here, the order just filled. So that's why this area here is grayed out. So now I have my profit taker and my stop loss are still in place. They're still connected. So again, notice how this area right here is grayed out. That's because the order was placed and that just went away. So now I'm looking at the rest of my order here in terms of how I can manage it. So I have my stop loss and I have my profit taker, which is way up here. Now, looking at this and I go, okay, well, is that a reasonable area to think that price can get to? And the answer is no. Right? So but I always like to set up a trade with the profit taker being far away, and I can always adjust it as the trade develops. So if I pull this over here, you can see here now in the daily here, I have Palantir, I have 500 shares, and my average price was 16.79. Okay, which is, I said I wanted my entry to be 16.79, so it was almost like 16.80. So I gave it a little bit of wiggle room to make sure I got filled. Now, if I had created that order where my limit and my stop were identical, maybe I would have gotten filled, but maybe not, right? So if you give it a couple pennies, a little bit of wiggle room, it can help ensure that you get filled. So now looking at this trade, if I wanted to be more realistic in terms of my target, okay, where do I think price can realistically get to? And the answer is using the pre-market level and using here. Probably I would be realistically targeting this level right here. Okay. So call it 1709. So if I go back to I would have already have looked at this and known that 1.2 is 1703, 1.4 is 1707. So the question is, could I get a minimum of 1.2 to 1.4 R to a realistic target with this trade setup, meaning the entry here and the stop here? And the answer is yes. Just barely qualifies, right? So I'm looking at 1709 as being a target, but I can lower that. Let's say if I want to go, say I just want to go 2R, I can lower that number to 1703, or I can make it 1.4R and go 1707, or I could just leave it right where it is. Now I would do that. If I go in here, I can just go in here and I can modify so here's my limit sell. So remember that this bracket order, I have a limit sell here of 1739 way up here. So I can change that and I can make it 1709. I just do that easily here, right here. I can use my wheel and bring it down, or I can just put the numbers in 1709. Then I'm going to update. And my stop loss is still down here at 1659. So I've been in the trade for about 20 minutes now, and the trade isn't working great, but it's also not working. Right. This is the candle that triggered me in, and I'm just getting some sideways action. What I like about this, okay, a couple things that I like about it and why I wouldn't be getting stressed out about it, because yes, it's not moving in my direction, but the longer it remains underneath this level but holds here, the greater the likelihood of when it does pop, it is going to move strongly. It doesn't mean it's going to happen every time, but in my experience, if this is holding under these, so you can clearly see you have your moving averages here, and price right now is kind of sandwiched in between the 10 EMA right here and then the other ones. And so all this sideways movement right now is just creating pressure. So, and if we are slowly making higher lows, you can see that. And if that keeps going, that pressure, so the resistance, the overhead resistance is holding price in check, but we are making just minor higher lows. So we're building pressure now. And if this can break this level and close above the resistance, then we have a good chance of this moving pretty quickly. But at this point, because I've been in the trade for 20 minutes, I'm going to adjust my stop. And I don't really have a whole lot of room to move it, but the low of this candle, and that's how I initially chose my stop, the low of that candle is 1663. My original stop was 1659. So I don't have a lot of room, but my rules say if I can move my stop even by a couple pennies to prevent me from losing a full R, I'm going to do that. So I'm going to go ahead and I'm going to change my stop from 1659. I'm just going to put it 2 pennies under the low here and make it 1661. I don't want to move it up in here to this last pivot here because we haven't gotten a strong close above my entry. So moving the stop up into here would be too aggressive right now, right? We need to give the trade time to work. We don't want to panic move our stop. So I'm just going to bring it up 2 pennies. And if that's all I can do, that's all I can do. But those 2 pennies mean I won't lose a full R if the trade goes against me here. So all I'm going to do is go to my stop, which is 1659. And I'm just going to go in here and I'm going to make that, it says 1659. I'm going to bring it up to 1661. I'm going to update it. And now my stop has been moved up just a couple pennies. And I can go to my chart now and I can right click this, edit, and make that 1661. I will color code this just to make it clear that that was my entry. This would be my target, just to make it easier to understand. I'm going to remove this. This was my original target, my 3R target. So I'm just going to remove that since I decided that this was a more realistic target right here. So no need to do anything here. So with the spreadsheet, you were simply leaving the numbers that you had, right? Because that was your original order. So you don't adjust anything here. Everything now is done in your broker. So that last 5 minute closed, last 5 minute candle, and you can see it closed as a shooting star, meaning inverted hammer shooting star, however you want to look at it. So high upper wick. So thinking about the candle sentiment, what does that mean? Well, at one point, I'm waiting for this to get me a close above my entry. I'm going to see a strong close above my entry before I can do anything, before I can actually really start moving my stop or being proactive in moving my stop. And at one point, this was a nice size bullish candle. And then, of course, it sold off. So yes, technically it is a bullish candle because it's green, but that selling pressure tells me that this level really, I'm struggling. I'm battling with this level because that's where the bulls and the bears right now, that's it, right? They are in a huge battle right now. And the bears are trying to protect this area up here. So they're defending this area. The bulls are down here trying to push up. So we'll just have to be patient and wait and see how this develops. So let's introduce a concept that we talked about early on in the class when we talked about support resistance areas and trend lines. So if you look here, here's a pivot low. This is a pivot low. We are making, as I pointed out before, we are making higher lows right now. We're not necessarily making higher highs, but we are making higher lows, and that's a good sign. So at this point, because I do have these 2 points here, if I wanted to, just to get as a visual aid, I could add this trend line here. And you can see that price is holding that trend line. Now, for those of you who have spent any time looking at or analyzing chart patterns, and again, I know we haven't covered this yet in class, but I'll just give you a quick little insight into it. What some of you might be looking at who study chart patterns, you might be noticing that this actually looks like a potential bear flag, meaning, so I'm getting a little ahead of our class studies here, but the bear flag is a pattern. It's a bearish pattern. That meaning price came down here and it is now consolidating inside the flag. You can see the flag, right? So here's the pole, here's the flag. Price consolidates. Now, the concept behind a bear flag is that price will consolidate in here and then it will eventually just roll over and go down. So I know that that is a common pattern that people look for. So if that does start to materialize, then I also know I can implement a if then statement and say if the trend line gets broken, then I can be more aggressive with moving my stop because I know that given the nature of this pattern and it is a more bearish pattern, price could get here, create a lot of pressure, and then just drop. But what I'm looking for on this trade is for this part of the flag to get broken and then have price go up. So this is a nice looking candle that's forming now. The time is 11:19. We need one more minute for this candle to close. And if this candle closes strongly, then that's a good sign. If it can close up here, if it closes with another upper shadow, well, then again, we are looking at, the bears are still there trying to keep price down. Okay, so we got our close on that 5-minute candle. Not the greatest close, but still, we're still making some progress. So we are still trading inside of the flag here, as you can see. We made a nice push here, but again, some buying or maybe some selling pressure up top here, right? And clearly you can see that the high of this candle, the high of this candle, and the high of this candle, pretty much all the same. Let me see. The high of this is technically 1684. The high of this candle, 1684. The high of this candle, 1684. Okay. So we know 1684 is the level that needs to get broken in order for this trade to work. So that's a key level that we need to keep an eye on. 1684. If we can get a close above that, that's going to be a good sign. So again, 5-minute chart here, 15-minute chart here. And we're just waiting to see as this continues to create pressure here inside of this, what price is going to end up doing. So as the trade is developing, I'm already starting to think about what is going to be my next move in terms of stop placement. So I have come up with my own if-then statement that is if price closes above 1684, which I know right now is a strong overhead resistance. If price closes above 1684, then I'm going to move my stop below this pivot here. Now I just have to wait and see if that comes to fruition. So right now, the high of this candle, 1684. You can see that it's struggling. That is that level. It's the level that we need to get above. We need one good push. Okay. So we did not close above that level. And we tried, right? It tried and ended up closing at the close of this candle was 1683. So as you watch the price action, you can see how it sold off. Then it made an attempt and it pushed up, but it's still holding that level. The high of this candle currently is 1684. Just to further expand on the trend line that I originally drew here, the reason I have that trend line is, again, a trend line is another form of support resistance. Price has been holding that level. You can see this pivot, and then all of these candles through here were holding that line. So now I know if that line gets broken, if we get a strong close below that line, this trade is likely not going to work. So as you watch this candle develop, you can see the battle that's taking place. It was a bearish candle, but look at all that buying pressure underneath. It's still holding that 1684, but it's so close to, there we go, finally, 1685. So we finally broke that level. Now, can we close above it? That's going to be the key. There we go. We're getting a nice push. Okay. Getting a nice push through that level. You can see how that was a battleground. And finally, we are pushing above it. Okay. Let's look at the close of this candle. The close of this candle is 1685. Okay. We closed above the level that I needed it to. So let's look at how long we've been in this trade. 5, 10, 15, 20, 25, 30, 35, 40. We've been in the trade 40 minutes. So It's not the strongest close above the level that I want to get above, but we did get a close above it. And so therefore, to mitigate my risk, because again, remember, trading is all about mitigating risk. So on this candle, because that closed bullish, I can actually move my stop. So just so you understand, I have rules. My trading rules say that I cannot move my stop if there's a candle in the opposite direction of the trade I'm going, meaning, so I'm in a bullish trade here because I got the close that I wanted, meaning a close above 1684, and it was a bullish candle. After this closed, I can now move my stop. If there was a red candle like this one forming now, I cannot move my stop. So my rule says that I can only move my stop when I get a close of a candle that I want in the direction of the trade that I'm taking. So because I'm bullish and I did get a close above the level that we were battling here, now I can move my stop. So I am going to move my stop up into here. The low of this candle right here, 1670. So I'm going to go ahead and I'm going to move my stop up and I'm going to do it by 3 pennies. Okay. So instead of 1670, it's going to be 1667. So if I go into my broker here now, my stop, right? Again, this is now just a game of pennies. I'm just trying to, at this point, mitigate risk. If the trade doesn't work and it goes against me at this point, because it still could, then I want to make sure that I lose less than a full R. So low of that candle, 1670. So I'm going to go 3 pennies underneath it. I'm going to go update this. And now my new stop is 1667. I can go in here to the chart, edit my stop, or if you want, you can leave that there and you can annotate things. You can, I can throw in text, on top of this, it says original stop. And now I just add another line here, 1667, I can say new stop. So you can do this in TradingView. You can do this in any broker that you're using. So if I want to do that, I just go into my drawing tools. I'm going to use a text. I'm going to put in here original stop. I'm going to make sure that the arrow is pointing down. And I'm just going to put that there. Okay. Now I'm going to take this. Now I'm going to move here. I'm going to say new stop. And I can keep doing that. I can label my entry and I can also label my target. Now, why am I doing this? Why would I want to put all these labels on? Well, we haven't gotten to this part yet, but we're going to be talking about how you should always journal, how you should always record your trades. So when I record my trades, I will take a screenshot of this. You can do the same thing in TradingView. You can actually do a screenshot that will give you a link, and then you will document your trades. You will journal them so that you can look back on them later to see how you did. And so it is helpful if you label these, that you know that this was your original stop, new stop. I can take this. I can put it right here. And I can just put in here entry. I can even put the dollar amount there if I want to of the original entry. I'm going to put that underneath the green line. And I can do the same thing. I can move it up here and I can label that as target. I can take it one step further if I want, and I could come in here and I can change my drawing and I can select this tool here and I can highlight the candle that triggered me into the trade. So documenting the trade is important because, again, when you can go another form of back trading as opposed to using the charts here is to look through your trade journal and look through it and look for the things that worked well, look for the things that didn't work as well, because I always like to say that there are no mistakes in trading. There are learning opportunities. So if you document your trades, you can learn from mistakes that you've made. So let's talk a little bit here about the stop movement. Okay. Again, the key to trading is mitigating your risk. Always try to lose less than 1 R. So I am not yet to a half R risk on this trade, but I'm fairly close. But I definitely have mitigated risk. Maybe at this point, if my just visually, I think if half of an R of risk is around right here visually, that means maybe at this point I'm losing maybe 0.7 R if it comes down here, right? So in terms of stop placement, what I like to do is I like to first try to get my stop to a point where I am only losing 0.7 R. Then the next time I move a stop, ideally I want to get to a point where I'm only losing a half an R. And then I keep moving it up that way. But I do ultimately want to get my stop to break even as quickly as I can, but without the risk of getting taken out of the trade. I don't want to be too aggressive with moving my stop. Now, what's interesting about what has happened here is we got the close above this level. So per my if-then statement, if we get a close above that level, then I can move my stop. I've done that. Price came right back down into this triangle area, and now it's flirting with breaking it. So I'm right back to my original entry right now. So right now here I was slightly profitable. Right now I am back down to my entry. So technically right now probably a little bit at break even, but this level, this trend line here needs to hold. That is a very important component of this trade right now, is that trend line, because we did break out only by a penny, but we still technically broke out of this overhead resistance briefly. And now we're right back down here. So now this level needs to hold. So if we get a close below this level, and also if you look over here at the 15-minute chart, what I don't want to see is ideally, I don't want to see a larger bearish candle here than what we just accomplished here. So now it's just a game of being patient and just waiting. But I'm also not going to panic exit this trade just because price is going against me right now. Right? That's the key also, is controlling emotion. Yes, price is going against me right now, but that's okay because I've already mitigated risk. When I took the trade, I accepted the risk. And so therefore I need to stay in and manage this trade properly without letting my emotions take over. So by the way, my new stop was 1667. And you always want to make sure that you're updating that in your broker. So at this point in the trade, one of the things that you want to recognize is that right now we were making higher lows. So this pivot and this pivot. What's going to happen is here's a pivot high. This is going to end up being the next pivot high. So this is a lower high than here. We want to make sure that we get a bounce out of here so that we don't create a pivot low. The reason I move my stop below here is this pivot right now is critical. If this level gets broken, then the trade is not going to work. Then it's gone against me. So when you're looking at the pivots, and just because, yes, this trend line right now has been broken, not a great sign, but I still have this pivot here as kind of my line in the sand, if you will. And that's why my stop went underneath this pivot. So if you think about right now, if I'd been more aggressive, I moved my stop up in here. At this point, I would have been stopped out of the trade. and I wouldn't have given it time to work. And just because we're getting a slight pullback here doesn't mean the trade is not going to work. It might not work, but that's okay. So let's talk about my new if then statement that I've developed. So now I've created a new if then for moving my stop. And that is if price closes above this level, then I will move my stop below this candle. So I like this candle. It was clearly shows signs of buying pressure. Doesn't mean that price is going to go up, right? Nothing's guaranteed, but I do like the fact that there was some buying pressure here. And if price can get back above this level, then I can move my stop below this. This would be a new pivot. So, one thing to note, these two candles, this candle here and this candle here, both have the same highs. The high of those candles was 1686. So, two candles side by side that have the same high, we refer to those as tweezer tops. So, just throwing out a term there that you will at some point here. So, two candles side by side with the same high are tweezer tops. Two candles side by side that have the same bottom are called tweezer bottoms. So we just need to continue to be patient and see if this trade can work out. What I am noticing off to another screen here is the fact that the broader markets, and again, we talked about that earlier today. What I mean by the broader markets, I'm watching the S&P, I'm watching the NASDAQ, the futures markets, and they're making a nice little bullish push right now. So if that push can be maintained and continue to go up, that's going to help this trade. Because again, most tickers, most stocks are going to trade with the broader markets. So if the broader markets push up, hopefully then it will help this stock to continue to go up. Now, that's not always the case. Sometimes tickers are just going to trade on their own and they're not going to follow the broader markets. And you never know in advance if that's going to be the case. You just have to let it play out. Okay, so price is clearly going against me at this point, and I'm likely going to get stopped out of this trade. Looking at the broader markets on another screen here, they made a nice push higher. Both formed shooting stars at the top of a move or near top of a move, and then sold off strongly. So this is no different. This didn't give me the same push as the market's bullish, but when the market sold off, that's when this happened here. So likely now that I will end up getting stopped out, although we are right down to this level here. So if we can close with a long lower shadow here, that would be a positive sign. We could just be simply making a double bottom here, meaning this bottom and this bottom. And this was the previous area where the bulls stepped in and said, we're not going to let price get any lower than this. And they push price higher. So let's see if they can do it again here. So remember that the history tends to repeat itself. And the same is true in stock trading, that if this level was held previously and price push higher, well, it could happen again. Doesn't mean it's going to. Again, no guarantees in trading, but I do like the fact that we got a nice lower shadow here. Let's see, the low of this candle, 1669, low of this candle, 1670. So it was 1 penny lower. So we got within a few pennies of our stop, but it held. So let's see if price can bounce out of here. So if I do get stopped out here, I want you to be able to see how the order fills. If the stop is hit, this order is going to fill, and both of these orders are going to cancel, meaning the stop will fill, but then my profit taker is going to get canceled because, again, the OCO bracket is one cancels other. The broader markets are selling off a little bit here. So we're getting a bit of a pullback in the broader markets, which would more than likely pull this trade down. So we're getting pretty close. We're within a couple pennies of the stop. We'll just have to wait and see how the trade develops. So far, the low of this candle is 1669, and the low of this candle, 1669. So it's at least for now a good sign that I have that level is being held. That means my stop is in the right place. Because if this level gets broken, price is likely going to go lower. So all the more reason why I wanted to move my stop when I had the opportunity to prevent myself from losing a full R. So the broader markets are making a push down. So this will likely be an area where I would get stopped out. If the broader markets can't bounce where they are right now, this will likely result in a stop out. Okay, so that level just got broken slightly here. So again, 1669 was the low of these candles, and we just got a slight push down. All right. So we're pretty close to getting stopped out at this point, still in the trade. So the low of that candle was 1668. So we got within a penny of our stop loss. And there we go. Stopped out the trade. You can see that that just filled, and then it immediately canceled the second portion of that bracket, which was my profit taker. So you saw that happen. That was the stop out. I'm now out of the trade. If you look over here, let me pull this over. So my loss on that trade was $64. And the original amount that I risked was $100. So it was right around a 0.6 R loss. And I'll take that. I'll take that every time. So what you have to ask yourself after every trade is, was it a good trade or a bad trade? Think about it. Was this a good trade or a bad trade? My answer for you is it was a good trade. And the point being, even a losing trade can be a good trade if you follow your rules. And conversely, even a winning trade can be a bad trade if you break your rules. Anytime that I lose a trade like this, as long as I have followed my rules, it's a good win. That was a nice win because I was patient. I honored my rules. I didn't break my rules. If you notice, I certainly didn't move my stop farther away to avoid getting stopped out. Take the loss, move on, look for the next trade. I hope you enjoyed the video. I hope this helps. I hope that this helped to clarify some of the things that we were talking about this morning in today's 90-day class, and I will see you tomorrow.